If you listen to these guys about how the real estate market is going, you probably think, well, the sky is falling. But if you listen to these guys, then you probably think now is an okay time to buy a house.
It's a beautiful day in this neighborhood.
So who do you believe? Stick with me for the next few minutes and I will tell you why our luxury housing market is stuck and what needs to happen to rectify it. And let me know in the comments down below what you think might help rectify what's going on in the housing market. First off, when we are talking about luxury real estate, it does not act or react the same way as the rest of the market. Many of the reasons that it changes is very different than the reasons that the rest of the market changes, and we'll talk about that. However, that does not mean that some of the issues currently plaguing the real estate market aren't having an effect on the luxury market, because they are. Most of what set off our shifting market to get us into this stuck position today is what happened last year when the head of the Federal Reserve, Jerome Powell, began talking about housing. He said the market had become too hot and needed some changes to make it better. This was his reset speech. Powell thought that if mortgage interest rates went up, this would help fix the problem. And here's what he meant. When mortgage rates are low, it's easier for people to get a house, and it means that your monthly payments will be lower every month. But sometimes those really low interest rates can become a problem. They can make people buy homes just to make money, even if they don't need the home to live in. This can make home prices go up too fast and make it much harder for regular people to buy a home. Now, this is exactly what happened in 2008, but it is not what has happened most recently. The most recent spur of home buying activity was actually brought on by the pandemic. People wanted to relocate to a different state, or they were buying homes as an investment. The difference between 2008 and now is that the people that were buying these homes for investment turned them into rentals. So they turned them into a home for someone else, which again, to be very clear, is not what happened in 2008. So to fix this, Powell suggested raising mortgage rates just a little bit. By doing that, fewer people would be able to buy homes and the prices wouldn't go up so quickly. This would make it easier for people to find a home that they could afford. Powell also mentioned how important it is to have a good balance of people that want to buy a home and homes for sale. The old supply and demand issue. When there aren't enough homes for everyone, prices go up really fast. So he wanted to make sure there was a good balance where everyone can find a home without paying too much. Overall, Powell wanted to make sure that the housing market was fair and stable. He thought that by making a few changes like raising the rate just a little bit, it would bring things back into balance and make it easier for people to buy homes. Unfortunately, that did not happen the way they had expected, so the rate hikes continued until June, when we've had our first pause in the rate hikes since they began. But what's been made very clear is that this is just a pause. They fully intend to get back to raising rates again. Why? Because although home prices did go down, they have slowly over time begun to creep back up, despite the rise in mortgage rates. Now, personally, I am glad they have actually paused this because it's now going to give the market time to catch up with all those rate hikes. Now, we touched on this just a little bit, but one of the biggest things that is affecting our overall real estate market everywhere is the shortage of homes for sale. Why is this happening? Well, people are deciding to stay in their homes longer. This means that there aren't as many homes on the market to buy. Many people are deciding to stay in their homes, including people in the luxury market. So we are not seeing the same number of homes that we normally see on the market for sale. And in the luxury price points, you don't often see the same number of homes that you see in other price points for sale. So having this decrease in inventory in this market sector alone has really made it challenging for buyers. I know I currently have 4 different buyers looking in that price point between about $1.5 million to $3 million, and we cannot find anything unless the house has to have a major remodel, which a lot of buyers just don't want to do. And the main reason that these homeowners are keeping their homes and not moving is because of these low interest rates that they locked in. So it really does make sense for them to stay instead of selling and then moving on and getting a higher interest rate. Now, when you are in the luxury price point, many of these homes, not all of them, but they are bought with cash. So many might think, well, then what's keeping them from selling? Well, it's because of what we just talked about, how low our inventory is. If they sell, where are they going to go? Now, we have to look at some of these home builders to really answer the question of why our inventory is still so low. See, after the 2008 financial crisis, many of these builders, they got very conservative on starting a home before they had a contract. They did not want to get caught out again. They did not want to overshoot their numbers again, so they have remained very conservative on the number of homes that they're willing to build before a contract. So there haven't been enough new homes being built to keep up with the demand of the people that want a new home. Then add in the pandemic housing boom and the supply chain issues. And this just further exacerbated this massive problem. And yes, this has been happening in the luxury space as well, with both custom and semi-custom home builders. They could not keep up with the demand. And the shortage of houses and rising home prices have made it harder for buyers to actually find a home that they can or want to afford. See, even in the luxury price points, buyers have a limit to what they want to afford. This can become a lot more fluid, but individual circumstances are going to dictate that. And with our rising home prices, I have seen in the luxury market, buyers explain to me what they're wanting, and they're wanting to spend about $1.5 million. However, what they're really explaining to me is a home that's going to cost them about $2.5 million. And as a result, it becomes harder and harder for buyers to find a home that they can or want to afford in this competitive housing market. But as this begins to shift, and it will, buyers will again begin to have more options for homes that they can buy. Now, if you're experiencing challenges looking for a luxury home to buy and you need a little help, take a look at that pinned comment down below. After the 25 years that I've been in this business, I have got amazing relationships with agents all over the country that deal specifically in luxury homes. So reach out to me if you need help, and I will personally connect you with someone that will be amazing and will help you with everything. Now, many of the agents that work in this luxury market also have a list of off-market properties, so they can really be to your advantage to work with someone. So let me know if you need some help. Now, remember when I said that the luxury market does not react the same way as other markets? That's because the luxury market is not just an ordinary market. It is like a giant web that is intricately connected to the global economy. See, when things get a little shaky or the economy becomes uncertain, or when international markets are bouncing up and down like a roller coaster, it affects how wealthy people choose to spend their money on luxury items, including homes. Think of it this way. Imagine you have a lot of money and you want to spend that money, but suddenly the world becomes unstable. Corporate profits begin to decline, the stock market performance becomes unfavorable, and maybe there's a big fight between two countries over trade, or some other important countries slow down economically. Well, when this happens, it's like a stone being thrown into a calm pond. This creates a ripple effect that spreads all across the luxury housing market. Even economic slowdowns can play a part in this dynamic. When key markets, which are like the big players in the luxury housing market, start experiencing economic troubles, this affects the confidence of those buyers. They might become unsure about their financial situation and decide to delay the purchase of that luxury home until things get a little bit more calm. This global game in the luxury housing market is a delicate one. One move by a country, conflict between two nations, or an economic slowdown can set off a chain of events that affects how wealthy people spend their money and make decisions. It's like a dance between the global economy and the desires of the affluent individual. Now, the way money and loans work can really affect the luxury housing market. In this luxury housing sector, the choices and conditions for getting money really impact how people buy and sell their properties. Oftentimes, when interest rates are high, those people buying in the luxury market will pay cash if they can. Versus when interest rates are low, even if they can pay cash, they will oftentimes get a loan so that the bulk of that money that would have gone into the home, they can use and make that money work harder for them. Now, because the loans that the buyers take out on these luxury homes is larger than what you would see on a regular house, these can be seen as a little bit riskier of an investment. And banks are extra careful and have stricter regulations when it comes to these loans. Now, when we're talking about loans for luxury properties, we're usually talking about a jumbo loan. It is with these types of loans that lenders will require more money down, proof of significant assets, near flawless credit, and an impeccable credit history. And lenders do this to ensure they're taking the minimum amount of risk possible when lending to these individuals. And because many of these buying luxury homes are also self-employed, the documentation that's going to be required is going to feel excessive. There will be a multitude of documents that you will have to provide to the lender to satisfy all of the necessary requirements. I mean, getting a regular loan is not the funnest thing to do in the world, but when you're self-employed, it can be a bit brutal, but it's possible. Now, if you'd like to see what's shaking up the luxury housing market, make sure you watch this video. Now, I also wanted to point something out. For those people that really believe that there are still some foreclosures coming. Now, I have an affiliate link down below where you can sign up to get a list of the foreclosure homes that are coming or not coming. It depends on what you think. Now, we are not seeing a lot of foreclosures here in the Arizona market, but I was just talking to a friend of mine who is an agent in Vegas, and they're starting to see a few more foreclosures pop up. So if that's something of interest to you, check out that link below. As always, I thank you for watching, and I'll see you next time.